And, specific with your expertise and Greenbox, like where would you say your sweet spot is, right? So this was a foreign national DSCR loan, and we were able to do a 40-year interest only. Like where do you see the opportunity, and really what is Greenbox's forte?
So I think Greenbox's forte is that we truly are a true non-QM exception-based make sense company.
Mm-hmm.
Our senior management is pretty flat in our organization. We don't have layer and layer and layer, so it's easy to get decisions relatively quickly. They may not be as, when you need a decision or an exception, you always want it yesterday.
Right.
But we're able to move things quickly. In terms of a sweet spot, Greenbox has a very strong product offering. We do full doc foreign national loans, but they're more intensive. We have the ability to verify foreign tax returns and foreign credit through LexisNexis and other means. Dun & Bradstreet. There's a lot of ways that we can put a file together for foreign nationals and other people as well. Non-QM is truly an alternative to agency and government guidelines. A borrower, you may have a borrower that experienced, not necessarily for fault of their own, but they may have had a bankruptcy because of medical issues. How frequently did that come up for you, Ron, in your career, that you have somebody who has the ability to make the payment but had to file a bankruptcy because of a medical background challenge?
It's happened.
And they still want to buy a home, right?
Mm-hmm.
But you have a 4-year window before you can put them in a conventional loan.
Right.
And so non-QM offers somebody that may have had that experience the opportunity to purchase even one day out of bankruptcy.
Mm-hmm.
And what that does is, again, that puts the ball back in your court to coach them. And when that time has elapsed, you can refinance them into maybe a better product for them. But they've had their home for 4 years now and built some equity. And so, but again, we offer a full array of products, from full doc to bank statement, 12, 24, and even we do have a 2-month bank statement program.
Oh, wow. 2 months. Okay.
2 months bank statement program. We have asset deletion, depletion. We have 1099 only for gig workers. Sometimes that's very difficult. We also offer written verification of employment only. We have a P&L only program. So we have a full array for foreign national, self-employed borrowers, or borrowers who may have had some kind of credit event. We offer higher loan to values with no mortgage insurance. So it's one loan, no MI, so that's not added to. We will finance unique properties, condotels, non-warrantables, properties with ADUs. So some of the things that don't fit inside the agency or government guidelines that you work with expertly with guaranteed rate, we have an alternative for your borrowers.
Right.
So,
and that's really key, because, while I have my share of, perfect credit borrowers that, that are executives, they make they have W-2 income, have amazing credit. They, have all their assets tied into a nice little bow. Not everybody fits in that mold. Right. And and to have to, if you're starting out and you're, a year into your business and you don't want to wait 3 years to file your tax returns and everything else, you just want to have that ability to, enter home ownership or investment. I would assume majority of your clients are investors, right?
Right. So it's about 70-30 for me.
So 70% investors?
Yes.
Okay,
so
that's who Wai-yee is, right? So she bought the property as an investor, and it almost helped us a little bit because there wasn't that emotional tie that you usually get when you have, families moving and everything else, when it's your primary, right? She approached it from a numbers standpoint, right? So, she looked at, okay, so the interest rate is this. I know that I'm going to get X amount in rent, and I know that my property taxes are going to be this. Okay, so in order for me to maximize my cash flow, I'm going to put down 60% versus 55, right? And she was able to just run those calculations, and she had that option to back out if she wanted to, right? So she, after that, before that option period, she could have looked at it and said, this deal doesn't make sense anymore. Right. And she had that ability to back out, but she looked at it and said, yep, this is how it's going to work. And, down the line, she, when interest rates, at some point, interest rates are going to come down. We don't know when, but, interest rates go up and down. Right. So she can look at that and say, well, I don't have the optimal cash flow right now. So, if rates are lower now, then that might be an opportunity to refi. Or maybe she moves here full time, right? And now it's her primary, and she is here on a either a work visa or has a green card, right? So now she would be eligible for that jumbo financing. So really, what being able to broker out loans or using non-QM, it's a nice bridge, right? Because it allows you to still have in comparison to quote unquote hard money, right? Where you're taking out you're paying multiple points. So you're paying multiple dollars up front, and you're also, at high interest rates. So in the tens and above, right? So by being able to have this non-QM space, it's a nice bridge. It's a nice alternative for those that, that may not have as much that they're reporting on their tax returns. So we look at bank statements instead, right? So if you're paying yourself and we see that income, but it doesn't translate to your overall over to your tax returns, we still have an option for you, right? And that I think is really key. And then, if you are not, if you don't have a green card, or if you don't have a work visa and you are truly a visitor, but you want to start to establish ties, that's why you have foreign national to help, right? Correct. So, and also, maybe, you have that high ambitions, and that particular property is worth it because it's going to generate a lot of cash flow, but you're not showing a lot on your tax returns to buy that particular property in a traditional manner. That's why you would want to use DSCR, because we're now relying on the cash coming in for that particular property, right? Because the rule is the rental income has to exceed that PITI, right? So it has to exceed the mortgage, that's taxes, correct, and the insurance.
Right. So equal to or greater than. However, some properties, and this happens sometimes, either the rent is not of market rents, or it's a true high-end luxury property in the multi-million-dollar value range, and it's just the debt service coverage ratio is not going to be met. So we have another product.
Okay.
Yeah, it's called a no ratio loan. So we're not doing a 1007 rent survey with the appraisal, because you kind of don't care what that looks like. And it's a true no ratio. Now, the rates are a little higher, of course, because we are risk-based priced, but it's an option. The other thing about the DSCR program, Ron, for your client investors who have multiple properties, agency loans cut them off at 10, I believe, currently, correct?
Yeah.
We don't have a property number cap.
Okay.
So I'm working on a file right now where this borrower has 36 properties.
Oh, wow.
Well, yeah. So you can imagine what his tax returns, his Schedule E's look like.
Oh my gosh. I couldn't imagine putting all those properties into an Encompass, right?
Right. Exactly. So,
Wow.
and having to spread and analyze all those Schedule E's. And if you're doing full doc and you write off a lot of expenses on your properties, you may not qualify that way. So this gives you yet another option using that DSCR to begin to build a true real estate portfolio, build some generational wealth and opportunities. I have one client who actually is in partnership with his children, and building a kind of a real estate empire in Texas. And so, but we don't have a limit to properties. We also lend to LLCs.
Right.
So we have a personal guarantor, and Wai-yee used that opportunity. So her property has the shield and the protection of the limited liability company. So, and we lend that to that. And so we're open to all of the things that will make a great loan for your client.
Absolutely. And I mean, that's really encouraging because, as investors, you're getting this information from all different sources. And if you only hear it from, prime investors, prime lenders, and then, they say, oh, well, forget it. I mean, you could get discouraged really easily.
Right.
So, to have someone that, that wants to make a deal and have that ability to, to look at it from the standpoint, okay, well, let's say that the appraisal came in and that rental income, it didn't exceed the PITI. Well, now your investors are going to look at it from a make sense standpoint and say, do I want to own, this, be in business with someone who owns a property in University Park in the, most sought after area in Dallas? Yes.
Right.
Right.
Exactly.
With the amount that she put down. Right. So that's kind of that makes sense part that, it's encouraging that we're able to really broaden our overall scope. Right. So I always say that, with guaranteed rate, we have so many different outlets. We're really that first check. And if we need to go beyond, it's great to know that we have even further reach into these other options. Rates are going to be higher compared to prime, but that's just because the reason why prime rates are going to be, it's because they're conforming, right? They're set by the government, right? So that's really the big difference. You have to take on greater risk because you can't sell those loans to the government, right? So it's a little bit different from that standpoint. Any parting words?
I just think that an important thing is, even though we're seeing rates go up, it's going to happen. We've ridden this wave before, right, Ron?
Right. Yep.
Even though we're seeing rates go up, it's still, real estate is still a great opportunity, again, to build generational wealth, to build your portfolio. My papa used to say, you can never go wrong with property. So other business ventures may come and go, but keep the land, right?
Absolutely.
So I think that even though rates are high, relatively so, I was in the business when people were paying 14% and 3 points.
Wow.
So things are relative. So
yes.
I think it's a great opportunity, especially for foreign national borrowers right now. We have the means, we have the vehicle, and it's a great place to invest dollars. Here in the United States, in Texas, there's so much growth in Texas in terms of companies moving there, new housing starts. They were, even though they were depressed nationwide, actually Texas had the greatest number of housing starts for the month of June.
It's incredible.
So,
it's incredible.
yeah,
Christal,
right.
thank you so much. I really appreciate it. We're out of time, but I really, really appreciate everything that you have done to help Wai-yee and me. And I can't wait to send more.
I'm ready. Let's go.
Awesome.